Hi, Ian Bennett here, Elevations Credit Union, bringing some mortgage option down payment discussion to you today. I've had a lot of questions about what are the options for down payment with mortgages. So I like to separate this question into three big boxes: Fannie Mae, Freddie Mac, government loans, USDA, VA, and FHA loans, and then jumbo mortgages. So starting with the conventional loans, or Fannie Mae, Freddie Mac. HomeReady, Home Possible, there's options to have as little as 3% down when you're looking at a conventional mortgage. Now, with those options with 3% down, you will have mortgage insurance. What I like about mortgage insurance is it's a sliding scale depending on your loan to value or your down payment, starting at 3%, 5%, 10%, 15%, of course, 20% down options. The minimum down payment is going to affect your actual mortgage insurance rate as well as your credit score. There's different ways to go through. I can get into more about mortgage insurance, how to remove it. We can do that in another presentation. The advantage of putting more down is when we go from 3% to 5%, 5% to 10%, mortgage insurance ends up on a sliding scale, so it costs you less. But the myth of you have to have 20% down is not the case. FHA loans are federally backed loans that you can have as little as 3.5% down. I find that FHA loans are great for first-time home buyers. Also, more specifically, folks that have less of a down payment, maybe a higher debt to income ratio, and possibly some credit challenges in the past. Now, USDA loans, I don't personally originate a lot of USDA loans. They're more rural agricultural loans that are issued through the USDA loan program or the Rural Development Guaranteed Housing Loan Program. You could have as little as 0% down on those. Those are specific for market areas, and I recommend that we go over those specifically. VA loans, if you're a veteran or currently military service or retired, you're eligible for a veterans loan. Veterans loans can have as little as 0% down, not a single down payment. And then last but not least, jumbo mortgages. Jumbo mortgages are typically mortgages that we have when loan amounts are above the conforming loan amounts of 510, 400. Those do change, so check back with us if in your particular area. There are high balance conforming loan limits as well in different counties. But for us, our portfolio products, we can originate mortgages, jumbo mortgages with as little as 5% down. And then going back to the mortgage insurance component, a little bit of insight into that, whether it's the jumbo mortgage or the conventional mortgage. Typically, for every $100,000 that we have in loan amount, when we go through the sectors or the classifications or the tiers of 3, 5, 10, and 15%, this is a snapshot about per 100,000 of what your mortgage insurance would be. So 3%, you're about $690 a year, 5%, $440, and so on. This assumes a 740 FICO score. There's more details in it. If you have more questions, feel free to reach out to us. We can be reached at 303-443-2050, or you can always reach us at Team Bennett at elevations with an S, the letters cu.com. Appreciate your time and have a great